All right, Sam, we had a big rally in stocks on Monday. I think the big question is this rally for real, or do we retest the lows that we saw last week?
I think yes to both. The rally is for real. I think that we probably end up retracing about 50% of the overall decline that we saw since January 26th, but then we have to retest that low that was found just last week in order to decide whether the 200-day moving average truly did resist the decline to go even further and that we move higher.
It was incredible to see these volatility funds spill over into the rest of the stock market. Do you think investors have sort of learned their lesson and that these funds won't play such a big role in the markets going forward?
I think so. They'll probably make a mistake somewhere else, but I think what it does is it reminds us that you have to be very careful about placing too much of a bet into one specific investment, especially if it's tied to a derivative. Also, it reminds us that there is a difference between an ETF, exchange-traded fund, and an ETN, an exchange-traded note, one that's backed by the underlying securities and the other one that's backed by the faith of the company that issues it.
So I guess you would not think that now is the time to buy, especially if we're about to retrace some of the levels we saw last week. But regardless, people should have some dry powder available for whenever the time is right. What areas are you looking at in terms of buying opportunities?
Well, we still feel that the economically sensitive areas are the way to go. We feel that economic growth, about 3.1% estimated for this year versus 2.3 last year, will do well. So industrials, materials, we think could outperform. Financials also as the yield curve steepens. And then healthcare, because that was one of the more beaten up groups that we think will end up seeing a nice recovery.
9 months from now, at the end of the year, are we going to be talking about the sell-off that we had last week? I mean, where do you see us headed by the end of the year?
Well, if we do only end up with a slightly more than 10% correction on a closing basis, then I think that we end up seeing a deeper decline later in the year. I don't think we've fully paid our penance, if you will. But that said, I believe that for the entire year, we will probably be up by mid-single digits. Our year-end target remains 2,800 on the S&P 500.
And that's largely driven by earnings growth?
Earnings growth and inflation. Our belief is that we'll see about $155 in earnings, and that year-on-year change in CPI will still be at 2% or slightly below.
All right, Sam Stovall, we'll leave it there. Always great to see you. Thank you.
Thanks.